In this quick skills video, we're looking at income tax. That is tax that's calculated on money earned through wages and salaries. So we'll look at calculating that tax. We'll look at net pay. And if you recall, net pay, that will be the gross pay, which is the total amount paid, subtract tax and deduction. So net pay is equal to gross pay subtract tax and deductions. And then we'll look at calculating tax if we're not claiming the tax-free threshold, and we'll talk about that shortly as well. So we'll start off with the actual tax tables. Okay, as of 2017, these are the current tax tables. So the tax-free threshold is up to $18,200. So we can see here, 1 to 18,200, you don't pay any tax. 18,200 up to 37,000, you pay 19 cents for every dollar over 18,200. Between 37,000 87,000, you pay 3,572 plus an extra 32.5 cents for each dollar over 37,000, and so on. So pretty much this is giving us the rule that we need to use to find the tax over the year. So please understand that this is annual. I'm going to really quickly go through a simple example to see how this works. Right. So if Bill earns, let's say, 78,000 per annum. Remember, per annum means per year. Determine, and we'll do a few things here. We'll start by saying we just want to work out how much tax he pays per year. We'll then work out his net pay, his net income for the year, and then we can calculate his net weekly income. So how much does he earn per week? All right, so we'll start with calculating tax. Now tax will be worked out by looking at the bracket that he fits into. So he's going to pay tax in the 37,000 through to 87,000 bracket. So he fits into that bracket. So we're going to use a rule for that bracket. Okay, so his tax will be calculated that way. His tax will be that 3,572 plus 32.5 cents, which is 0.325 for every dollar he earns over 37,000. So that means we're going to look at that 78,000 subtract 37,000. So he'll have to pay this 3,572 plus 32.5 cents for every dollar he earned over 37,000. So 3,572 plus, let's do this calculation. So that means it's 3,572 plus 0.325 multiplied by 41,000, which will be 3,572 plus 13,325. That ends up being 16897, or $16,897. Now, it's an easy way to check if you're in the right bracket. This value should fall between that 3,572 and the start of the next bracket. So you can see there's between 3,572 and 19,882. And because we're close to that 87,000, this value is pretty close to that 19,822. So there we have it. Bill pays $16,897 tax per year. When we look at calculating his net pay then, net pay will be equal to that gross income, gross pay, subtract the tax and deductions, but we're not dealing with deductions at the moment. So net pay will be equal to 78,000. That's what the gross is. The gross is what he gets paid. And the tax is 16897. So after tax, he earns 61103, or $61,103. So he earns $61,103 per year after tax. Now the last one is a nice easy one. We're just trying to work out his weekly pay, his weekly gross pay, which will be annual gross pay over the number of weeks in the year, 52, which will be 61,103 on 52. And we get approximately 1,175 and 6 cents. I'll use my approximate equals here because I did approximate. So his weekly gross income is approximately $1,175.06. Alright, so it's nice and easy. It's just a matter of following this table. Now, there are other tables that exist. For example, in the worksheet that you'll be looking at, the table is an 09010 table. Now, it works the same way. It's just these values are a little bit different. There's been changes over the last few years. So I'm going to show that table very quickly. Okay, when we look at the 09010 table, you can see it's pretty similar. The big difference here is that tax-free threshold. So that means only people owning up to $6,000 had no tax to pay. So only people owning up to $6,000 had no tax to pay. And after $6,000, they had to start paying tax. Now this leads us into our last little topic, and that's when people are not claiming the tax-free threshold. So you won't get many questions with this, but it's good to understand. If somebody has a second job, generally, they will not claim the tax-free threshold. You can only claim it once, or if they just want extra tax back. So at the end of the year, when they make sure that the person's paid the right amount of tax, they work out they've paid too much and they'll get more money back. It's a bit of a tricky way to save money. So if we use the 2009 to 10 tables and we look at a quick example, so we'll say we earn $1,000 per week and we want to calculate yearly tax, and we'll put in brackets not claiming the tax-free threshold. Okay, so that means for this first section, that's 6,000, they're going to have to pay that 15 cents per dollar. All right, so in that first section, they have to pay that lowest amount, so it's always going to be the one below it. All right, so earning $1,000 per week, our friend in total, so annual pay or annual gross is going to be 1,000 multiplied by 52. So he's paid $52,000. So he's going to fall into this category, 35,000 to 80,000. And to calculate that tax, we're going to use the information in that section plus adding on the amount for the first section. So we can see that it's going to be 4,350 plus 30 cents for every dollar over 35,000. So we've got 4,350 plus 30 cents for every dollar over 35,000. So we've got 52,000 take 35,000, and we're going to add on an extra amount for that first section. So for that first $6,000, we're also paying 15 cents. So for the first $6,000, we'll pay 15 cents. So we have 43.50 plus 0.3 multiplied by 17,000. So 30 cents a dollar for that 17,000 plus 900, which is 6,000 times 0.15. So 4,350 plus 5,100 plus 900 gives us $10,350. So our friend, after not claiming the tax-free threshold, will pay $10,350 tax. Okay, there we have it. There's our quick little intro to income tax. Make sure you understand the difference between net and gross pay and how we can calculate the tax. Remember, the tax all comes down to the table. The table tells you exactly what to do.